Hey everybody, Andrew Kent,
Shante Johnson.
Rooted&Co, and today we have asked Cole Butcher with Intercap Lending to join us on Zoom, and we would like to talk a little bit. We've got some questions for you, Cole. So
I'm here.
can we fire away?
Yeah, absolutely. I mean, let's start by just, mentioning that I'm a little bit better at social distancing than you guys. Here I am in my office by myself. So just putting that out.
10 and under. So,
we qualify. We still are good. But yes, that is important. Good. I like it. Well, okay. So the number one question right now, can I get a 0% interest rate loan?
Or are they coming?
If you could, I would not be on this interview. I'd be on the phone, getting more people this loan. 0% interest. Sorry to disappoint everybody, but those are not a thing. So basically what happened on Sunday is the Fed cut rates. What does that mean? Basically what that means is it's generally for short-term lending toward businesses. So especially at a time where people are kind of freaking out to some degree, and businesses are, slowing down a little bit, maybe some layoffs. The Fed they're basically trying to get a little creative, right? So they're trying to incentivize businesses to continue to do business. So they've cut down the interest rates that these businesses will borrow money so that it incentivizes them to continue to do business. We are seeing some effect on the consumer rate side. We're seeing it more, as a consumer from a lower credit card interest rate. If you have any mortgage or HELOC or anything that is attached to the prime rate, you've seen quite a bit of dip in that. But as far as
home equity line of credit, a HELOC. All right, home equity line of credit. Got it. Just making sure everybody knows the.
Oh yeah.
Terms. That's right. Yeah. Okay, but on a primary mortgage, we're still seeing, rates. And now that kind of leads us into our second question, but I think you answered that in 0% for a home loan doesn't exist.
Correct.
Which makes sense because mortgage companies have to make money, and this is kind of what hopefully will keep things going. So I get it. But our second question then would be, what can we expect? We're kind of right in the beginning, upheaval, so to speak. Right now, what does it mean for rates in the next little bit, in the near future?
Yeah, so interest rates are very volatile right now. They are very up and very down. Historically speaking, we're still talking historical lows. So one thing that I am very conscious of mentioning to clients is making sure that they understand that, look, all in all, interest rates are still amazing. Right? When you talk historical averages, still around 7 or 8%. So, I mean, the fact that we are seeing fluctuations. So for an example, Monday, there was an excitement because the Fed's cut rates, right? So mortgage companies, we did see a dip in rates, and we were back down into those low to mid threes. Just in these last couple of days, those investors, those servicing companies, those bigger banks have basically dialed off of that. And we've seen a pretty big jump in rates, and, have had this fluctuation up to the fours and the low fives, depending on someone's scenario. So I guess, interest rates are very volatile. It's basically becoming much more apparent and more important for a consumer to have a mortgage advisor to basically have their file set up so that, we can quote unquote time the market, right? To make sure that we're locking on the right day versus locking on the wrong day when you get a 2% higher mortgage.
And you had just kind of shared with us an example of somebody who took that advice, or you were able to, help them time the market, which is usually like a curse word to people in our industry, to the public. Yep. But it is kind of what it is right now. So it's more about being smart and being ready, would you say, day by day to take advantage of the rate?
Yeah, no, absolutely. So the example that I gave, I have a client that on Monday, the par rate, which means that you're not paying any excess origination to buy down the rate to get a better interest rate. you know, we had them at 3.5% for their interest rate. They were shopping lenders. I informed them that, you know, rates are very volatile right now, so we just never really know. The next day it was 3.875 with a point buy down. And then the next day it was 3.99 with a 1.5 buy down. And at a point, I guess for those of you who don't know, so a point is basically a percentage point of the loan amount, right? So a $300,000 loan amount that you have on a house, that would be 1 point would be $3,000 of origination.
Okay.
So
and normal is like half to 1% or something.
Yeah.
And then this is an additional amount. Okay. So what happened with that?
Yep. So we basically already had their file set up. They were, again, like I said, shopping lenders, so they did run some risk in that. But today they decided to roll forward with me because we were getting them better interest rate than any of the other lenders that they were shopping with. Of course, you know. And so I'm a member of a number of different groups and services that basically give us alerts when these servicers and these banks will be doing what's called a reprice for the worse, right? So they're basically worsening the price or, you know, increasing that interest rate. So I get an alert that says, you know, alert to lock. So I called that client and I said, hey, you know, we don't have a ton of, you know, waiting period for your loan because we're closing in, you know, about 2 weeks. So we can't really float this too much longer.
Basically, we're like, move it now.
Bingo. Yeah. So, hey, we got a lock. Boom, we locked it in and they were super happy, right? And if they would have waited another 30 minutes, there was another 0.5% bump. So, I mean, we probably saved them anywhere, you know, just in interest a month, it was probably about $100 a month.
Wow.
So it's important to talk to your lender and have everything all lined up so a lender can be looking and lock you.
Bingo. There it is.
And you know, we want to wrap this up. We want to wrap this up, but I mean, I think the last part of this is it a good time to buy or refinance? And people are asking that. And I think everybody in general would think, oh, I want to wait. But what happens is with the market the way it is, people maybe are waiting to list their home that don't have to sell. And so if there's buyers out there, which we have a number of them, we've talked to them, that are still wanting to buy, looking to buy, like the rates are still great. And maybe one day it's a little bit higher, but then if you're ready to go when they drop back down, which they've done several times, you can go, you lock it, and we move forward. And, you know, you can even, as a buyer, find a home that you like, and we get going down the track and we can get you out of it if rates get worse or you get in a situation where it doesn't work. So we can help you time that. Same thing on the listing side. There's a lot less inventory. So if you do have a home that you want to sell, there's not a lot of them for buyers to buy right now. So when you work with us or when you work with a competent real estate and mortgage professional, you have an opportunity to take advantage of the market on either side. So that's kind of the message we want to get across. So thanks, Cole. We appreciate that. We're going to check back in with you, you know, weekly or more as big things come up, and we want to let people know what's going on. So we appreciate your time today. Yeah, appreciate you guys. Things are changing rapidly. So talk to Andrew and Shan. They're the best. Okay, so Cole Butcher, Intercap Lending. And we will be back with you with more videos. But for now, be healthy.
Be bold.
Be rooted. Thanks, guys. Take care.